Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here as a Chief Executive Officer of Treasury Consulting LLP. And today we are covering technical analysis on a currency which is known as not the most volatile currency of the globe, but a currency which has already been currency which is always focused, always look forward. And I think to a very great extent that traders keep looking at how this currency would react and so on and so forth. None other than Chinese yuan. So today we are covering dollar to Chinese yuan, and here we deliberately taken a data of last 5 years in Chinese yuan. Now, as you very well understand that China is a country with lot of attention, and especially the activities which they are doing, like they opened up Shenzhen to Hong Kong zone, which over the next few years expected to touch a revenue base of 6.5 trillion dollars, which is not a small amount. I don't think that anybody who is watching this video can say that $6.5 is a small amount for Chinese yuan. On the other hand, Chinese yuan has joined SDR, Special Drawing Rights, in October 1st, 2016. With this, they are now the reserve currency of the world, and all those who are watching this video are very well aware of this fact that it is the Chinese yuan. It is the same Chinese yuan who already have more than 6% share in the world foreign exchange reserves by the portfolio managers. So total for foreign exchange reserves across the globe, as per the few research reports by International Bank, is approximately $10.5 trillion to $12 trillion, and out of this you have a share of roughly 6%, which is approximately 600 billion types, which is not a small amount. In my view, this is definitely not a small amount. And one important thing why we are presenting this video, and of course we are covering two technical analysis tool also, is to tell you something strange that couple of years ago, China used to had approximately $4.5 trillion of FX reserve, which they draw down, and now it is approximately $3.2 trillion. So, which is $1.2 trillion has been spent. 1.2 means $1,200 billion has been spent by Chinese only to manage the fixing of the currency. Now, what do you mean by this? As you very well understand that China is not till now. China don't have an open financial system. So that is a separate fact. That it has still been managed by I would say it's still being managed by People Bank of China. Right, that is a separate fact. And every day People Bank of China is doing the fixing of the fixing, and that fixing is determined by the People Bank of China using a specific formula, and this is known as NDF, non-deliverable forward, non-deliverable market. Now, if you spend $1.2 trillion only to manage the fixing, it means something going on. That's for sure. Something going on in the market. That is why you are managing your fixing. And let's see how the Chinese yuan reacted in the last 5 years. Now, China was here. When I still remember, China was 6.7 something, right, in 2011. They consistently decrease here, because that is a sure fact that People Bank of China, I think it is if I asked to choose 3 central banks across the globe who are doing a lot of interventions in the market, then I would say the first would be People Bank of China, and second would be some other banks. Would be European Central Bank, and Central Bank of Tokyo. These 3 are the big central banks who are doing a lot of intervention in the market. If you see, and every day People Bank of China is doing huge amount of intervention. So if you see that 6.7 was here, and now it is trading at 6.0. It is 6. So approximately 0.7 big figures or 70 basis point. Now here I still remember, which is 2014. I hope you remember that 2014. Chinese started to open up their financial markets. slowly. They have not still not given the entire control of the financial market to the hedge funds and the foreign institutional investors or to H shares and all. But slowly they are giving the freedom. Now with this, it has moved to 6.7. Here comes October 2016, approximately here, where China joined the SDR, and it was approximately 6.60. I was expecting that a lot of fanfare would happen pertaining to that. It would be a lot of media clear, lot of presentations would happen, lot of analysis and research reports would get circulated, but nothing of that has happened. And if I clearly see that in the first few trading days of October, Chinese yuan is losing, it is depreciating, and today it is trading at 6.7. So they started their journey in 2010 June here at 6.747, approximately 6.8, and after 5 years of journey, more than 5 years of journey, they are reaching the same place. So it is a status quo. So what it does suggest that Chinese would like to depreciate their currency, and at the same time, but it does suggest that they want lot of, because this, of course, if Chinese currency would depreciate, this would lead to a big margin for exporter. Because if I am an exporter who is exporting $1,000 of goods outside the world, and ultimately my cost is in Chinese yuan, and if one Chinese yuan will turn out to be 6 versus one Chinese yuan turn out to be 6.7, of course this is the cause of concern. The cause of concern stands at I would get 70 paisa more. Though I would get 70 paisa more. So Chinese are very much interested in depreciating, but slowly. I'm not sure why they are stressing too much on the fixing, because because of course there is a lot of trade which is happening outside China also, and which is, you can term this as a CNH, which is offshore Chinese yuan. But believe me that Chinese bank are doing an intervention here. Now if you look at here, which is one we made for you, which is HV, historical volatility, then you will get to know over the last 5 years Chinese yuan is maintaining a volatility of approximately 3% in their prices. Henceforth, you will find several thousand people across the globe who will continue to say that Chinese yuan is pegged. And I may not be denied from that Chinese yuan is not pegged. But if you look at here, approximately 2015 July, then the volatility went to 6%. Because this is the place where Chinese devalued their currency. You can see there here also. This is the place when they devalued their currency, and in two tranches. Now one tranche is here when they devalued, and another tranche is here when they devalued. I hope you remember that in July and August 2015, Chinese devalued their currency in two parts. I still remember that in 2015, a lot of talks are going on that Chinese would love to devalue again, and they would like to keep devaluing their currency unless they would be able to, I would say, stabilize their economy and so on and so forth. But they not did that. And Chinese is going up because a lot of activities happening in the China pertaining to it is acting as a global financial center and so on and so forth, right? So again, if you look at the relative volatility index, which is right here up front, this relative volatility index is suggesting simple: no buy, no sell. First of all, let me tell you that CNY is not a trading currency for traders. It is CNH, so which is an offshore yuan. So traders prefer to trade in CNH than in CNY. But still, if you are a trader who is having CNY as a portfolio, I do not think that there is any devalue they will do in the Chinese yuan, to be very honest. And I don't think that China will fail to attain a growth rate of 7.5%. I think they would continue to maintain the growth rate of 7.5%. Of course, I would appreciate that their export figures has been declined today to the 7-year low. These small things would continue to happen nonetheless, so we should not be much critical about that. So, and I would see that 1st October Chinese yuan is turned out to be an offshore currency, and I would see that China would surely bring a lot of changes in their financial system, and this way the currency would be more volatile. I'm not saying that China would be able to open their financial center. This will certainly take some time. but my long-term vision towards Chinese yuan is then the average volatility of 2 to 3% would be higher. It would move to 5%, and I think it could may even move to 6% in the longer tenor also. So the traders who are doing in CNY and CNH, because this would have an associate impact on the CNH also. So the trader who have CNY and the CNH in their portfolio, they need to understand that this volatility would have. So this was the purpose of the video, and we would like to bring more videos to you, which would be covering variety of the technical analysis. Thank you very much, and have a great day ahead.